I want to go to a few names that are actually doing all right, and there's a lot of interest, Ed, because of your discussion of the EV industry. Honda Motor here seems like it's well extended, but we just wanted to highlight this the stock action again, and seems like at at this point, when you are 12% above the 10-week moving average, you just want to wait and watch, don't you?
Yeah, I think so. And someone's asking, is this climax action? I mean, it's like it's gone straight up. It could certainly pull back. I don't. This is way too early for a climax run. I mean, in my view, it doesn't mean it can't
Yeah.
stop. It might plunge 15% here. The UAW strike is probably a big help to these folks, and as well as for Honda and Toyota, and I think even Nissan is getting up there. So and production just generally is improving. I mean, it's fine. We're finally seeing that improvement. I think there's been concern that prices will struggle because of that production coming up. I mean, obviously that's hit Tesla this year, but I think pricing in general is leveling off. But if UAW strike intensifies, these guys will be able to churn out a lot of vehicles,
Hmm.
and in the U.S. at least. And so that would be a real positive for them. So yeah, and you can see the earnings have turned around finally. You can see, look at the sea of red for a lot of these things. They're just struggle after struggle. Last year just could not. I mean, there are so many automakers. It just seemed like every time you think, oh, they got momentum, they just could not make vehicles because of chips and other things. And I just don't think that's as much of an issue anymore. So, uh, I know that some of these automakers like Toyota and Honda are not doing particularly well in China. So that's something to keep in mind. Their EV offer, the ICE vehicles are just getting rolled up by EV makers in China. So that's something to watch out for. But certainly in the US, they're doing quite well.
Very nice comeback indeed in sales growth. There was a question from Hassan and others about TM, and this one is also kind of gone from a traditional buy points, including a trend line buy point, right? We had a really nice trend line break as it
Hmm.
crossed above the 10-week and 40 weeks. Then we had a little cup that formed on top of the saucer, pull back to the 10-week moving average. So depending on where you initially bought, these pullbacks at 10-week line actually offered a good opportunity. What do you think, Ed?
Yeah, I think they did, and now they're gone, and that's so now you have to watch them again and see if they hold up. I will say it's Stellantis, which, look, it owns Chrysler and Jeep and all those things, but it's not, that one's still done pretty well, all in all. They have a lot of,
Hmm.
they're actually, one of their big selling points is the fact that they don't sell in China. I mean, that's just a tough market for everybody else. But the fact is, they're this European automaker with big US exposure, and those markets that are still a lot less competitive than China. And
Hmm.
so that's one reason why it's certainly not going up like Honda and Toyota, but look at that pie. It's holding up reasonably well despite the UAW strike, and that's the other one that's doing pretty well.
That's a really great point. And I had no idea Maserati is not sold in China. I would think, wow, what an opportunity there. Fiat, Alfa Romeo, Maserati, some really great brands, obviously owned by Stellantis, as well as the vaunted Ram trucks and the Jeeps, really, really popular across our country here. 7.6% yield. Look at that. I don't know if that's a misprint, but boy, that's really amazing too for a
Yeah.
stock that has already uh,
You think they wouldn't have such a high dividend just because they'd be wanting to save some of that for like investing in EVs, and the stock has gone up a fair amount in the past year. So if that yield is correct, you would have imagined that they would have been raising the dividend quite a bit in that time. So anyway.
well, you pose a great question because you look at the operating cash flow, right, for the past fiscal year, $7.34 a share. That's a lot of cash flow given how many shares a company has. And that was really well above the earnings of $5.87 a share in the corresponding year. So clearly, a company with low debt to equity is really executing well. And I think those are little factors, little details that make a difference. Can't ignore this. A 3 PE ratio is unbelievable, but it's even lower than some of those home builders that we've seen, and a lot of the oil and gas stocks now that, of course, that they've gone up a lot. But that said, this is certainly the big one among the big three that we all should pay attention to.